Hi, welcome to this video day, which is on the 10th of August. It's Saturday. We're just going to be looking at what we consider to be a fantastic opportunity for profit in the Forex markets right now, which is based around trading pairs, keeping in mind the US-China trade dispute. Now, we've been focused on this for a good few weeks, and our view in very simple terms has been just to buy safe currencies over risk currencies, in particular the Japanese yen. Japanese yen has soared higher, great profits. I think there's more to come. I'm not going to talk about the yen in this video. I'm going to look at some pairs in relation to trade wars, and a few of them are kind of under the radar trades. In terms of what I mean by that is not many traders are focused on these pairs, but they offer really great risk to reward. Even if trade wars, they kind of the tension eases a bit, the trades should still do well. Trade wars get worse, they'll do even better. We'll come to a few pairs in a moment. Now, in terms of trade wars getting worse before they get better, I think that's going to happen. And also, the media is not focused on something that could happen that is just so dangerous in relation to these tensions. And if what I think could happen does happen, just generate the biggest volatility in many decades. I'll come back to that a little bit later. Now, in terms of trade wars, we think they're going to get worse before they get better, obviously. I just want to show a short clip, actually, of Jim Rogers. Many of you might be familiar with him. One of the greatest traders of all time, worked with George Soros at the Quantum Fund. And he's talking basically in a clip coming up about the US accusing China of currency manipulation, and also where these trade disputes might go. Now, the clip is only around, I think it's 4 minutes 50 seconds. It's well worth watching. Jim Rogers very worried about the situation. It doesn't look good. So we're going to just show this clip of Jim Rogers, and then I'm going to discuss in a little bit more detail about trade wars, and then we'll look at some pairs. So here's the clip. We're back in a moment to discuss
this. Thanks for being with us live. So a dramatic drop in the yuan there. It's been corrected a bit, but why this massive reaction? Was it to be expected?
Well, Kevin, if you put billions of dollars under tariffs, don't you think it would affect the currency? I mean, for goodness sakes, maybe China's helping it, but anybody knows who knows any basic economics that you hit a huge economy with lots of tariffs, it's going to have an effect on the currency. I don't consider these guys currency manipulators. It's the way the market works.
What about this statement now officially calling China a currency manipulator? What does that actually mean in practice?
Well, what it means is, the words mean that if a country such as Russia, if you want your currency to go down, you put your central bank to work selling your currency to drive it down. It can be done, and it is done quite a lot, especially in smaller countries. But what America is saying is that China is now driving its currency down. Perhaps they are. There's no question that they can. On the other hand, the facts are, Kevin, America's put hundreds of billions of dollars of Chinese products under sanctions. That, of course, is going to drive down the demand for the currency. I mean, this is a simple fact. I mean, Washington could try to distort it if they want, but it's a simple fact.
So what China's doing here now, is that going to help China offset these tariffs?
Yes, if your currency goes down, it makes your goods somewhat cheaper, and you hopefully can sell them. On the other hand, it increases your cost of living and your cost of production, because then everything you buy is higher and higher. If you buy copper on the world market, for instance, and put it into a product, the price of your copper is going to be higher.
At a weak yuan makes Chinese goods cheaper to sell abroad to export, but is that a good or a bad thing as far as China's concerned? Might it sell more? How's that going to work?
Well, their plan is, and yes, with the currency down, countries do it all the time. Russia's doing it. With the currency down, it makes your goods cheaper, and perhaps you can sell more. On the other hand, as far as America's concerned, it makes American goods more expensive, and therefore more difficult for America to sell goods in the world market.
So America's introduced tariffs on China and Europe as well, as we've been saying. Is Beijing right to accuse the US of protectionism here, or is it overstepping the mark?
Of course it is. I mean, America, I don't think even America would deny, well, maybe they would deny it, but no, America's started trade wars and tariffs with many countries in the world. I don't know what maybe you can say it's not trade war, but to me, it's trade war.
But this at the same time as these trade negotiations were going on, falteringly it must be said, but were going on between the US and China. What's happened now going to help those negotiations? I mean, China are going to dig their heels in even more, aren't they?
Well, I would suspect so, because China knows that the American election is coming up, and that if they have the patience, and they are in a society where they can control it much more than America can, maybe in their view, if they sit and wait, and America starts suffering, they've already said we're not going to buy American agricultural products. Mr. Trump would not be president if it weren't for the farmers in America. So maybe they're going to try to hit back at him where his votes are. And agriculture is a big part of his votes.
As we were saying earlier on, this allegation of currency manipulator hasn't been leveled by America since 1994, Bill Clinton. And when you do that, apparently it's a way for countries to be able to then instigate trade talks. But these trade talks have been going on anyway between America and China. So again, why do that? What's the point of this currency manipulator allegation today?
Well, Mr. Trump says that the Chinese have backtracked. The Chinese have agreed to do some things and then backtrack. The Chinese say the same thing. The Chinese say the Americans agreed to do some things, then backtrack. I have no idea. I wasn't in the room, but they're both now shouting at each other.
What's your feeling? What's your feeling about what's really going on here behind the scenes and where it's going to go?
Well, what I'm afraid of is it's going to get worse for a while. The markets around the world are going to go down, and Mr. Trump watches the American stock markets. And when the American stock market is down a lot and his friends are feeling pain, then we will probably get some kind of announcement that will sound like good news. Markets will rally, but it's going to hurt for a while longer first, Kevin.
And if this gets worse, it's going to affect more than just America, more than just Chinese trade. Could it be turned into a global problem?
Kevin, it's going to be a horrible global problem. It may ruin us all in the next few years. Trade wars have never been good. And even if you're not in the trade war, you suffer because all the world's economies suffer. So everybody around you suffers as well. Kevin, no trade war in history has ever been good for anybody. Even if somebody thinks he won, he didn't. He lost. Everybody loses. Now, Mr. Trump thinks he's smarter than history. He thinks he can handle history.
Voice of experience, Jim Rogers, financial expert. Thanks for coming on at short notice. It was great to see you.
Right. Obviously, the views of Jim Rogers there, and he's pretty gloomy about what is going to happen going forward. It's hard not to be. I just want to expand on a few of Jim Rogers' points and basically put a few others in to get the really big picture of what's going on here and why it is so hard to solve. Okay, obviously we'll look at some Forex trades as well, but in terms of this standoff between China and the US is not just to do about trade. It's to do with two superpowers, very weary of each other, and America very concerned that technology is being stolen, which will help China. Yeah, it's really a battle between two superpowers to maintain an economic and technological lead. Okay. Also, there's geopolitical problems involved in this as well, which makes the problem harder to solve. I'll come to them a little bit later. Now, Trump, he's not a politician first; he's a businessman first, and his view on trade wars is he can win. Basically, China exports more to us than we do to them. So I can't lose a tariff war, as Jim Rogers points out. It does hurt the US, though, because obviously the farmers are being hurt, to a major part of Trump's support. But my view on this is he's already given out subsidies. He'll perhaps increase them to keep his base happy. I mean, if you look at Trump's stance, it's very much, China has to do something and concede. So he doesn't look like he wants to turn around his stance at the moment. That's his position. Of course, he's very unpredictable. We've seen him kind of change his view pretty quickly in the past. But on this point, in terms of trade wars, it just seems pretty entrenched. And if he did turn around or turn his stance around pretty quickly, the media would see it as a Trump defeat. And he does have a little bit of an ego. So anyway, Trump's not for turning. China, as Jim Rogers says, they want to tough it out, keep their eye on the elections. Also, the Chinese president is under massive pressure from the Communist Party elite not to back down. China is seeing this as kind of America trying to assert itself over China. And this is leading to some geopolitical tension as well in terms of what China considers an area of influence for it, which we'll come back to in a bit. But the problem we've got is China's slow-up is dramatic in their economy. The media are underreporting it because they think the Chinese economic growth is bigger than it really is. There's been, for a good while, skepticism about Chinese GDP, for example, which many people believe cannot be right. And there was a big study recently which proved it probably isn't right. And China has overstated its economic growth by 20% per year since 2008, which makes the Chinese economy a lot smaller than people believe it is. And the slow up is now probably bigger. I'll come back to that in a moment. But how did this figure of 20% less come around? Well, there was a study done at the University of Hong Kong by 3 guys, and I think one guy was at the University of Chicago. They just did a massive study of secondary data to work out what Chinese economic growth is. And that involves everything from rail freight to sea freight to power consumption to satellite imaging of China by night. And believe it or not, that's a good indication, gives a good indication of economic growth. You can go and look up the study. Chinese economic growth not as big as reported in the media. Now, in terms of China, just make this point. It's hard for China, the authorities. Okay, they do present what they want the world to see, but it's even hard for them to work out what the GDP figures really are, which they've alluded to in the past, because the provinces basically overstate their growth, so basically get bigger subsidies from Beijing. So China's admitted itself it has a problem getting an accurate GDP figure. Anyway, in conclusion, it's a lot smaller than the market believes. And if that is the case, and it's 20% less growth since 2008, it would mean the slope is even more pronounced than is reported in the media. Okay, anyway, moving on. China is very aware that their economy could hard land or they could have a crash. Okay, they're aware of this. Now, before US sanctions came into play, China was trying to stabilize their economy. They admitted that it had grown too quickly. They needed to cool it down a bit. There would be a bit of pain, and they should be able to get things back on an even keel. But growth had just been too quick. So we're trying to stabilize the situation, of course. And then the US hits China with sanctions at exactly the time they don't need them. Well, they don't need them at any time, but obviously when they're trying to stabilize the economy, it's just making their job harder. So they've kind of got situation critical in the economy, which they're very aware of. What are they going to do if the economy really starts to accelerate to the downside? The longer these trade wars go on, the bigger the possibility of that happening becomes. Well, there's probably other things they could do. I've just pointed out 3 here. They could let the yuan go down, but the problem with that is you're going to get flight of capital from the country, which Jim Rogers pointed out was probably the reason why the yuan went down recently to a large degree. So if they want to let the yuan down to try and help their economy, would they have to have capital controls, maybe to stop capital flight from the country? Well, if that happens, that would cause real turmoil in financial markets, a real blow to risk sentiment, to put it mildly. They could try a stimulus increase, try and stimulate their way out of trouble, which is what most bank research departments and the IMF advise them to do. But I think the Chinese are pretty aware that stimulus, when they've done so much in the past, will have limited impact, and basically could make things worse. So China's have got a really difficult problem. Now, the standoff is bad enough because that's making markets nervous and hurting the risk sentiment. Then if the Chinese economy really starts to get in a bad shape and the Chinese have to respond, maybe in the ways I've said, maybe they've got other ideas in mind, and that's going to be really bad for risk sentiment or worse. And I think the media, when they talk about these sanctions, it's all about China can tough it out and the US is the country that's got the real problems. Not focusing enough on the problems that China has to deal with. The US economy, sure, it could be hurt, but the hurt is really more in China at the moment. Major spin-off problem. Historically, if you have trade wars, leads to tensions that could result in military conflict. Now, I do not think that we're going to have a military conflict between China and the US, but you've got to keep in mind that China feels like the US is kind of picking on it, okay? And it's got a sphere of influence, and that sphere of influence it doesn't want interfered with, okay? Now let's take Taiwan. America, wanting to sell advanced weaponry to Taiwan. That has angered the Chinese, which is going to make it even more difficult for them to back down in a trade war because, yes, one China. If you're not unaware of what one China is, it's Taiwan. It's not a separate nation. It's part of China. Big weapon sales to Taiwan from America to defend itself against China. It's just, kind of angered the Chinese, to put it mildly. So you're getting the Chinese view kind of entrenched, not to back down. The US could back down, like I said, but I don't think that's likely. You've had those clashes between, they are two superpowers with big militaries as well. Clashes in South China Seas with those atolls that China's claimed and America sails by them, and then you have a big kind of dust up in the media. You've got Hong Kong, definitely seen within the Chinese sphere of influence. Look at what the Chinese are saying about these protests in Hong Kong. They're indicating they might deal with them. And when they say deal with them, that means that China will just basically take Hong Kong totally under its control. It won't be like semi-autonomous, so to speak. That will again elevate problems at political level. China has warned countries like the UK and US not to meddle in Hong Kong. In terms of China, it is obsessed. When I say obsessed with order, that's just historical. Okay, if you know anything about the history of China, you've seen them do that big clamp down in a province. I can't remember which one it is now, but it's the biggest one. A massive clamp down on the people there. They could easily do the same in Hong Kong. And that spin-off of protecting what you feel is your own, and the US, China sees as kind of in its sphere of influence. That just basically makes trade wars hard to solve. Hope I explained that correctly, but major problem. Now, obviously, in the Forex markets, I just got this feeling that risk off is going to accelerate. The China problem is just one of numerous problems in the world and can impact on the global economy. I did mention about yen trades. We've done extremely well out of them. Just going to look at a few other trading opportunities, kind of ones that I think longer term could be great for trend following. And a few of these trades, like I said, are a bit under the radar. Most traders not looking at them, but to me they look really good. So let's go and take a look at some trade setups. Right, first pair may not come as a surprise to regular viewers of our videos. It's AUD CAD. we view this as one of the strongest downtrends in the Forex markets in terms of it's got just such limited upside, the AUD, and a ton of downside. And even without trade wars, the AUD, in our view, is going down. They're just going to help it go down a little bit quicker. First became interested at 95, sold, got stopped out for a profit, sold again, and come down really nicely. And this trade up around just over 300 pips, and just got such limited upside. Why? Because if you think about it, Canadian economy doing better than the Australian economy. That's clear from the data. Canada has the edge in terms of interest rates, better interest rates. It's exposed to the US economy, which is better to be exposed to than the Chinese economy, which obviously the Aussie dollar or Australia is exposed to. You're seeing shallow rallies, okay? This rally, shallow, it will end. Aussie going down to 80. If you look at the trade like this, I know it's not the most volatile pair, but if you look at it in percentage terms, if we look back from 95, it goes to 80. Well, that's 25%, isn't it? Still got 15% or so in depreciation in our view, and it can easily run on to 70. Just one of our favourite, longer term trades, and there's one that complements it, which is also worth doing. They're kind of similar. The next one is NZD CAD. Right, the backdrop in this pair is exactly the same as in the Aussie dollar in terms of the way the fundamentals favour Canada. And again, trade it in a similar way. Nice move down. We got stopped out. We got back in at 72.20. And we're at 68.62 when I did this chart. So this nice big tumble here, kind of similar profit to AUD, USD. There's the day of the interest rate cut, was bigger than expected by New Zealand. Just not much upside in our view. And if you're unfamiliar with the way we trade, we'll normally go one level of resistance, which is first level, and then we'll go back behind the second level, okay, with our stop. Even if we were stopped out of this one, we'd immediately look to re-short again, okay? I'll put 68 as a weekly support target, which I need to basically remove because we're near enough there or we've hit it. It should go down to 60, so another 800 pips, and it could even overshoot that as well. If you do both pairs, basically, by doing both pairs, you're going to get somewhere in the middle. You're not going to get the best performer or the worst performer, are you? And I just quite like doing these two pairs together. Not sure which one is going to go down the quickest or the fastest, so both, but for me, both are going down. Now, the next pair I want to go to is a currency that is very exposed to China, which is a more minor pair, but it's on most trading platforms. So let's go and take a look at it. All right, from the chart of USD SGD, chart from Member Center. I've kind of highlighted this one in the last couple of forecasts that we've done, as the USD should move higher on the Singapore dollar. Now, in terms of the background of trade wars, trading, against countries' currencies that are exposed to China, obviously we think is going to yield big profits. And Singapore very exposed to China in terms of exports, also Taiwan and South Korea. They're slowing up quickly. It's also a major transport hub of the region. Trade is slowing up, so the port earns less money. So for us, when trade wars heated up, you saw the USD sort of bunching around this 20-day moving average. It come off its lows. We've come in 135.65, and basically about 260 pips in terms of profit. Now, I'll put my target as 144. That's first target. It can easily run to 150 or 160 longer term. So a couple of thousand pips from where we are now. And this trend is just beginning. You get in on a breakout above 138.50. Don't need too much of a stop. You can see where mine is. If we do break higher, If we did break through these support levels, just key off this 20-day moving average. A long way to go to the upside. Now, a lot of people are not USD bullish, but for us, this looks a great trade. And let's say you were bullish of the euro. You could trade the euro long on the SGD. Okay, obviously Japanese yen is a good idea. That's moved really nicely already. I'm just going to look at euro SGD because a lot of people will have this on their platform. This trend, that is the candle that is signaling more strength for us. Bit of erratic price action. You're blue, and you're coming off the breakout point here. So a stop just needs to be behind there. See if she runs. If she did come through this blue, you'd key off the 20-day moving average. But I'll just show you the potential on the monthly chart. Basing, moving up, 20-week moving average gives away 165, then 175, so a couple of thousand pips. Very similar to the USD. I think, yeah, being short the SGD, a great long-term trade is shaping up right now. Most traders are going to have it on the platform, and pip spread's reasonable. The Singapore dollar fundamentals look really, obviously, poor longer term, like the AUD and NZD. So for us, trading the Singapore dollar short, I think, great trade. Going to look at USD now against the AUD and the NZD, and again it's a bit similar. I know these are not minor pairs; these are the more major ones, obviously. But USD going to push the AUD and NZD a lot lower. So is the euro as well. So let's just take a quick look at them. Obviously, the more major pairs now. We finished with these three minor pairs, which I think look superb. Anyway, right, let's move on to AUD USD first. Right, we're on the AUD USD. Again, if you're not a USD bull, you could always do the euro. For me, the AUD is going down on both the USD and the euro. And it is a nice tumble for us. Now back at the 68 level. You had that exhaustion candle there. Okay. A bit of a rally. The rally will fade. Okay. Just take it on weakness if you wished, back below 68. She might run on. I've got our stop close to protect some profit. But if we were taken out, we just key straight off that 20-day moving average, stop well back behind it. I don't see the Aussie dollar doing much on the upside. I've got 60 as our downside target first. 800 pips away, we could even overrun that down to 50. You look at Euro AUD as well, looks a good setup. Now let's have a look at which one do I want? Sorry, I've forgotten. NZD USD as our last. Right, last pair, NZD USD. Obviously, Euro NZD looks good. Nice tumble down. Big red candle here when obviously New Zealand cut rates. I think it's going to be hard to take out the body on a close basis. I moved our stop down basically just to protect some profit. But if we were taken out, I'd look for any signs of kind of a top or weakness. Stick my stop back down the 66 level on 20-day moving average. I do not see anything other than a shallow rally at best. I think if we break lower next week and move away from the 65 level, we'll continue to the downside. I've got monthly support as 60 as my target, but you might be thinking as well, it's less than the Aussie dollar. It's only 500 pips, but I meant to extend this down to 50. That's how far I think the Kiwi could fall. Now, in terms of the trades we've looked at, a few lesser looked at pairs, and obviously these are majors. But 3 countries we picked out: Australia, New Zealand, Singapore, really heavily exposed to China, and they all look like they're going down further in the pairs that we've picked out. Done well so far. We'll see if it continues. Obviously, anything can happen. Okay. But at the moment, the trade wars between China and the US looking pretty worrying going forward. And that means more weakness in the countries exposed to China and their currencies. I know it's a kind of simple strategy, but it's working well, and we'll see if it continues to work, and we'll update in a future video. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.